All right, well, let's talk a little bit more about the stock market story as we're wrapping up the first quarter of 2025. Two things have held true. The trade uncertainty lingers, and number two, it is starting to show up in the economic data. Now, as for how you approach this as an investor, let's ask one. Mike Vinokur is portfolio manager at Propels Wealth Partners and with IA Private Wealth. Mike, it's good to see you. And I guess the great unknown is tariffs, and tariffs were a big driving factor of the markets throughout this week, and then everyone's looking ahead to more tariff talk next week. How do you digest the tariff uncertainty? How do you deal with it as an investor?
So I think we need to all step back for 1 second and understand that Mr. Trump is a business person first. And I think that eventually what he's really trying to do is he's really trying to renegotiate trade agreements more broadly. He feels that, the U.S. has gotten a raw deal from trading partners, whether it's in Europe or China or even the friendlies, us in the north and Mexico in the south. But at the end of the day, we all want to have stronger economies. We all want to have better supply chains. And I believe that this is more of a negotiating tactic than it is the stance for the next 30 years. So eventually businesses will adapt. Eventually the politicians will make a deal. Will it be the same as the USMCA? I don't know, but I do know that there will be what we will come to call the new normal at some point in time in the not too distant future.
Well, you would hope, because there's been so much hype around so-called Liberation Day, April 2nd next week, where there would be sort of more details on the U.S. essentially wanting payback for tariffs they've been hit with from other countries over the years, so reciprocal tariffs. But you raise a good point. I mean, we've heard from a number of people this week who watch the Washington scene closely, who believe that for a lot of the trade that ties back to Canada through an existing trade relationship, maybe there's something constructive that we'll see emerge from that. The flip side to all of that is there are a lot of people who have heard Trump talking about tariffs for a long time. And is there a possibility that, in light of the fact that now, and you even saw it with the U.S. data today, you saw worries about the economy and sticky inflation. Like, these are not the things that sit well with stock market investors. So investors are avoiding with their money. Do you think there could be a balancing act between Trump achieving his true long-term goals with the potential economic reality in the short term that could derail his ability to achieve those goals in the way he envisions them?
Sure, absolutely. But I think that between the comments that Scott Bessent has made and the comments that Howard Lutnick has made and the comments that even Trump has made, given that they've put out a policy and then having it walked back, right? Tells you something. It tells you that there's always a little bit of room for negotiation depending on which group is putting the right pressure valve on the Trump administration. You had the automakers come in, put some pressure on him. He said, okay, I'll give you a reprieve. You had the energy industry come in, the tariffs were 10%, not 25. So I think that there's negotiation back and forth going on behind the scenes.
Okay. Now, against that backdrop, you've got client calls to make, you've got investment ideas to consider. You brought some stock ideas to the table today. I wanted to take a second to go through them. Technology is a great example of a sector that very quickly got hit by the tariff uncertainty. It might be as much about the fact that tech stocks had a big run. But I noticed that Alphabet, the parent company of Google, is on your list. A company at the forefront of the AI boom. You could make the argument that this week, with their latest Gemini update, they're making the case to Wall Street that while search might be impacted by AI, that they have some pretty good AI offerings that are going to help them along. How do you think about a company like Alphabet in an environment like this?
So first of all, I think you need to unpack what is Alphabet, because Alphabet is no longer just about search. Alphabet is about Waymo, it's about YouTube, it's about Gemini, it's about search, it's about Willow, right? It's about the war chest of cash. It's about Wiz, which hopefully the acquisition gets done.
Cloud security,
yeah. It's about their cloud offering. So, you know, you look at Alphabet as a compilation of systems. It's almost like a holding company where you've got like 7, 8 different divisions.
The GE of today or something like
almost,
that.
right? They're sort of interrelated. And then you have a fortress balance sheet, you've got a small dividend, and the multiple that you are paying for this compilation of integrated businesses is less than the market multiple. Now, I'm not sitting here and saying, oh my God, this thing is going to grow by 20, 30% a year. It could.
Yeah.
I'm not saying it has to.
Yeah.
All I'm saying is if the earnings estimates are correct and they're going to earn $10-ish plus or minus next year, you're paying 16 times earnings. And 16 times earnings, whereas the broad market is what, 20, 21, 22, is A, a discount to the market, B, you're getting a fortress balance sheet, and C, you're getting a team that's proven itself on being able to not only organically grow amazing divisions, but also acquire.
Okay, I'm going to try to squeeze in 2 more names here that you brought to the table because it's always great to get insight on how people think about their investment ideas. Freehold Royalties is on there, which really has a lot of exposure broadly to energy. You've been fairly long-term bullish on energy, yes?
Interspersed.
Okay.
You know, energy is a commodity. You have to be a little bit in, a little bit out. You can't stick around for too long because these things will mean revert on you.
Yeah.
Right now, we are in the seasonal period of strength for energy, which technically lasts from December to May. But Freehold is just one of those companies that is extremely well managed, great balance sheet. And because it's a royalty company and not an actual producer, it's a lot less risk operationally for what you get. And with the huge dividend, we don't need a much higher price of oil and gas for that dividend to be sustainable.
All right. And finally, financials. A lot of people say, you know, we like financials. It's easy to sort of pigeonhole that into banks. You put Lincoln National on your list. They're like annuities, life insurance. They do retirement plans. So it offers you a lot. What is it about the Lincoln business that sort of speaks to your investing thesis right now?
So the Life Co business, and this goes almost back to Warren Buffett. Why does Warren Buffett like property and casualty? Because the insurance business, it's the float, right? So what happens with insurance is people need to pay their premiums in order to get their coverage, right? So it's almost like a guaranteed cash flow business. And at the same time, with this specific business, you get a company that's growing, very cheap on a forward earnings ratio basis, cheap on a price to book basis, and you get a 5% dividend yield while you wait.
Okay, lots to chew on there, Mike. Appreciate your perspective as always. Thanks for stopping by.
Pleasure to be here. Thank you.